look at what's happening with the bond market in the U.S. for right now. I mean, the 2-year is up by 9 basis points. I mean, yeah, we got the UMISH data, but other than that, it's really hard to find like a real trigger. What do you think explains this move? And do you want to be buying a note that's yielding 4.73%?
So, I mean, yields are, I think, very attractive at the front end in the US at the moment. If you look at, front-end treasuries, or you're looking at the front end of the, the corporate market as well, you can get some very attractive yield now in, risk-free rates, or, corporate bonds that are very, very high quality, that are pretty liquid. So it is an attractive part of the market to be at the moment. Given that the curve at the moment is incredibly inverted still, then you're getting much more attractive carry at the front end than you are further down the curve. So, at the moment, I think, particularly given the level of uncertainty that we have in terms of where interest rates may go from here, in terms of the trajectory of inflation, the economy, and other impacts that we may see come through this year that, we don't yet know from previous rate hikes or, other risks as well, then I think, getting, liquid, attractive carry at the front end, it's a good place to be.
Marilyn, what about further out? So, do you wait to buy duration because there may be a better opportunity further down the road because ultimately central banks are going to be hiking more than we all think? Or do you say, yes, central banks may be hiking more than we think, but ultimately that means they're going to be cutting even more aggressively? So I'm wondering around the timing on buying duration, because if they tighten too hard, they're going to have to cut pretty hard as well. When do I buy longer dated bonds?
Yeah, that's a very, very tough question, I think. I think if you're looking further out the curve and when you want to lock in duration, then, we do eventually expect that you could see, obviously a steepening of the curve. We do think that you will eventually see, higher rates further out the curve as well as we see improved data in growth and inflation. When to lock that in, maybe taking baby steps now to try to lock some duration in. But I think given just the level of uncertainty at the moment, given the fact that in summer, liquidity isn't great in fixed income markets as well, and we're just looking at the next, 1 or 2 meetings from the Fed and the ECB, we're looking at it now, but there's no rush, I think, to get into duration right now.